Hello and welcome back to Core Finance. I'm Matt Brown. I am joined by Mike Van Dulken, Head of Research at Accendo Markets. And we're going to look at a couple of specific stock picks in the FTSE today, starting off with Tesco's, big UK supermarket. Really, the supermarkets haven't been doing that well this year, a lot of inflationary pressures, etc. Where can they go? I mean, is 2018 going to be the year for the UK supermarket?
Well, the advantage we have here is that if currency-wise we don't deviate too much more, some of that price inflation is going to fall out of the equation, which should offer a little bit of help. You never know, it might even get a bit of wage growth as well, which would, reverse some of it. I think the story with Tesco here, this bullish breakout is on the back of unfortunately, the demise of yet another UK PLC in the form of P&H going under, which has been taken, I believe, as positive for Tesco and the Booker tie-up.
Yes.
So that could, offer some potential, additional market share take for the UK's biggest grocer, which remains under pressure from the smaller, more nimble discounters from the other side of the channel. But of course, that was always going to slow up. And they're still encroaching, but not as quick as before. So this, it's still in an uptrend there, Tesco, from June. And if anything, it could be, if you want to look back there might be potential for a test of rising resistance around 205. But otherwise, this, that may have unlocked the door to a rise back to the 220 highs of the last 12 months, which doesn't look much, but still a 10% move.
Fantastic. And looking at Barclays this coming in the week, where Bank of England stress tests, I wouldn't say all passed with flying colours, but at least we got over the line, and that's got to be a positive for the UK banks.
I was a bit mystified by the use of passing with flying colours yesterday. I mean, if anything, that's the reason why, because Barclays has jumped this morning, I think, on a bit of clarity towards the Brexit situation. But if you can see there, the drop-off yesterday, although we did finish towards the highs, which is a bullish signal, Barclays and Lloyds are the ones sailing closest to the wind in terms of the stress test. So that was an understandable reaction on that front. But here, it's great to see the bounce. But as with so many of these charts, you really have to look at something seriously long-term. It's kind of buyer beware of the long-term trend in many cases, because you're either trading near multi-month or year lows, or indeed highs, which could see resistance kick in. And the financial sector's one which is still intricately linked to both the clarity or lack of it in terms of Brexit. So for now, this is a welcome test, but there's potential for that long-term falling highs resistance to kick back in almost immediately at 193.
Good stuff. Well, two picks there, or not necessarily a pick, one to look at and one to maybe look at as a short. But in the meantime, Mike, thank you very much for joining us here today.
Thank you.